Here you go. Once again, SMF is a market maker in what? S&P 500 index options.
It's 2,000
Look
more.
at the amount of contracts that traded at 15. They're buying on the last high or slightly below it. 2,000, 4,000, 6,000, 8,000, 11,000 contracts traded at $15. Of course, SMF, we own these from yesterday. We bought them. And you can clearly see here the amount of volume here that people are buying. And look at here. There was 1,000 contracts bought at $15. We're out to sell this up toward the high. Here's the S&P daily chart. That blue line right there, everyone, is a 10-day simple moving average, not the weekly one. And you can clearly see here that these are late prints right here. No, they're not. Somebody sold below the market. Well, how dumb that would be when the last print was $15 a contract and someone throws off. Now, MMTs, look in your level 2 up there and tell me if you got a 1320 time and sales print.
Yeah, I see it. I don't understand it.
Well, you know what? Not everyone is very smart.
You got 15, 16 on the bid. You think it would have went off on that?
Well, look at here. Somebody just bought 10 of them. And
on the bid, yeah.
Same thing happened yesterday. They're
$2 wide.
Late prints.
Late prints.
Late prints here. Okay, that's what these are, I'm being told, because they are. Your 14 by 16, 1570, someone printed. We own these contracts from yesterday. We own those down toward, we're about $1 off of the close. Okay? We're wholesale. Because we knew that we were going to get a rally. And we knew that the fear indicator would come down. And we knew that the Jackson Hole meeting with Mr. Bernanke on Friday is going to be an event that people aren't going to be happy with, in my view, because they're looking for him to do the stimulus again. And they can't be doing that. We'll talk about that later date. I am really pleased with the amount of contracts traded, how the MMTs learn how to trade as a market maker in the option pit, not your regular market. You want to go regular trade options, go ahead. You ain't going to get ahead. But working the market the correct way as a market maker on the bid and ask all the time and knowing when to get in and how to be in control and doing all the right things, well, hey, that's a different story. And the story is right here on the S&P chart. You can see it. Tells you S&P 500 index daily, right at that 10-day moving average. And let me tell you another thing good for the bull. As far as that 10-day simple moving average goes, mathematically it's flattening out. It's not going down, and it's flattened out. And this daily bar today on the S&P is 2 times greater than yesterday's little sell bar, and it's probably working on close to 2 times greater than the previous last down negative bar 3 days ago. This is what you want to see when there's breakouts. And you want to see where this particular green bar today, intraday daily, right here, right now, is breaking out. And it's taking out these last bars by 2 to 1 almost. This one is for sure. And this one there. And, you know, the thing about it is, as we move up through these daily movement averages, the bear will have to cover. The bear is short the S&P. As we move up, there'll be technical electronic orders that go off called buy to cover. And the whole thing about this rally was, my friends, was that we were going to take the other side of everybody for the last part of the August and all of the stuff that's going to happen this Friday and all of that, was we would rally up into Friday. And we are. And we haven't faded back. Like yesterday, we sold off. We made the high, sold off, but guess what? There is a game changer. And the game changer is that this S&P has come back up close to my 1160 handle. Okay, up 35 handles on the day. And we still have a lot of overhead resistance, but this is part of that whole bottom right here, my friends, look. And this is what you want to see, is that bottom up trade. So, bottom up, bottom up, You make up to the third crow. The fourth day, the fifth day, you had a narrow range, indecisive, confirmed, come back down, test that trend line. These are the original bottoms of the volatility. A couple of, last week and the week before. This is 1, 2, 3, 4, 5 days right here from that reversal to the support level. And you have to see this kind of buying go higher. You've got to see where the up volatility is as equal as downside volatility price action was. We'll visit it later. Here are the contracts on the S&P. So we're kind of pulling back a little bit, but here's the amount of volume on the $1,200 call. Okay, and what I'm going to tell the MMTs to do, it's 12:17 p.m. Pacific Standard Time. I'm going to tell them to put this contract out because it's the only one of the only options I know that trade 15 minutes after the closing bell. They're going to put this out to sell right now at $17.90 or $17.70. That's $1.70 higher than the ask. You can see how wide it is. So put the limit orders out there, and we'll see how the market can fare itself in the last half an hour. Once again, S&P 500 daily chart, 10-day simple moving average is being tested at resistance there. And what we would like to see is as it does go up through there is where the short sellers, those are the bears, they have to buy to cover, and then you get the upside move.